What is up, my dudes? I am back yet again, back to back daily uploads with your boy. Hopefully he can keep this up. Will he? Won't he? We won't know, but you gotta stick around to find out. Alright. Anyways, today what we'll be covering, you read the title, you already know. But what else? It's a little bit of an intro, alright? Because yesterday I actually did cover some analysis, and yeah, I'm uploading again today. And I'm actually gonna cover to get a little quick recap, get a little feel for the market. Right, so first things first, let's get straight into that, and then we'll cover that one little mistake that most traders make when they start their trading journey. So, without further ado, let's take a look at the charts. So if you can see over here, this particular area, right? If you take a look over here, I actually entered into a trade last night at this level, right? This is basically the Aussie dollar, right? We talked about the commodity pairs, right? First pair that I probably brought up was the Aussie dollar, right? And actually I entered a trade around this level over here. It was around 0.67630, right? That's not exactly there, but basically roughly around the area, right? Okay, so I entered around here and I collected 40 pips all the way down. 40 or so odd pips lah, right? Not exactly, but right as per analysis, right? Exactly hit my TP, exactly as per what I thought. Got a real feel for the market and I actually took that trade. So just to share with you guys that actually if you pay attention to these little analysis, or what I really feel about is that we can actually monetize on this kind of situation. So if you learn something from my videos, then please apply it to the markets if you wish. But as I always will say, please, for beginner traders, apply it to your demo account first. Lose your fake paper money, don't lose your hard-earned cash, right? But that is not the little mistake that traders make. I actually would like to cover that further in later into the video, but right now I'm just covering this trade, and I'm gonna just make a video diary out of it and drop my thoughts. But basically what happened was I took the trade around this level, right? And I wrote this entire red candle down, but I was a bit apprehensive. I was a little bit scared, even though I was actually quite confident. Why? I was a bit scared because I was trading on a competition account. Right now I'm in a trading competition, and not many of you know that, but basically I'm in a trading competition, and I really would rather be safe. And I'm kind of happy my standing as of right now. But if I would like to ride that wave on a high, then I would have to be a little bit safe. So if this was not my competition account, if it was my own account, right, I probably would have entered around here, same entry, right? But something that I would probably change is I would actually turn up my risk a little bit more, and increase my lot size. I was really playing it too safe, but that's an okay thing, right? It's a more of a hindsight thing. It's a bonus. But all in all, I'm very happy with this trade. Why? It hit my TP, right? Right to the point where I analyzed it, right? Maximum of 60 pips. Took 40 pips first, right? Just to be safe. Why? Because I did expect this little bounce back over here. I don't know if you can see that, but around this level, right, you see that there's a lot of pintails, right? A lot of these long wicks at the bottom, right? And this shows that the price actually bounced off a level, right? And I did expect this to come. I didn't expect to come so soon, but that's why I entered my TP at 40 pips first before going for the full 60. So it's okay. I hit my TP. I'm very happy with that, right? It was a good collection on the way down. Everything else was good. Just probably would have open my lot size slightly bigger. That's the only thing I would fix for this trade. So if you're watching this along with me, why is this guy rambling about his own trades? Is he trying to like praise himself, pat himself on the back? No, right? I'm actually trying to keep myself in check, and this is what this channel is for. I'm gonna keep myself in check, and you are gonna keep me in check, and hopefully you learn from me and you keep yourselves in check. Because when you trade, you gotta be accountable. You gotta be accountable for yourself and for your actions, i.e. your trades. All right, so enough with my little what do we call nagging, right? We shall move on to this one little mistake that traders make. And yeah, let's get into the video. Right, we are actually going into the, anybody know what this is? These are the time frames. So if we actually click on here, there is a whole list of time frames, right? You can choose them. There are multiple to choose from, right? And as you can see, I'm on my very, very favorite 4-hour time frame. I typically only trade on this time frame. But the one key mistake that beginners trader make when they take a look at their chart, the first thing they do is they take a look over here in the minutes, not in the hours. Right? Typically, a lot of beginner traders, they like to hover in this area, 5 minutes, 15 minutes, right? And it always seems to bother me because something like this, it's incredibly fast paced, right? It's moving so quickly. It's like some people even trade in the 1 minute time frames, right? And I just don't get that. It's like, take a look at your chart, right? It looks ridiculously tiny to me. Yes, why? Because I was moving from the hour to the minute. But even if you zoom in, right? My question to these beginner traders is, what are you guys looking at? Like, honestly, what are you guys looking at? Because when you look at the charts, right, what are you looking at? You're reading a new language, right? You're trying to read the language of the market. You're trying to understand what's going on your screen. But these beginner traders, they are opening 1 minute charts, right? 1 minute charts. When you get to know someone, when you talk to them, do you get to know them over a minute? Do you get to know them over 5 minutes? 15 minutes? No. Could you argue that you could get to know someone over 4 hours? Not quite, but maybe a little bit better. So, if I were to use this analogy for your chart, right? If you want to get to know a chart, right? Understand where the market is going, right? For a beginner, I'm not talking about a trained psychologist, right? Who just met someone, he analyzed your mannerisms and he will just know what you're like. But if you're talking to a layman, someone like me on the street, if I just met you, would it be wrong for me to judge you within the first minute that I met you? Yeah, so apply this to the market. Wouldn't it be wrong for me, a beginner, to open a fresh chart and say, I know what's going on, I know how to make a decision, I know whether I should buy or sell based on a small time frame, right? Between the minutes. And why I don't encourage people in my community or my friends or other traders out there to actually trade, right, on lower time frames. Why? Because you can't get a real grasp of whatever you're trading. It doesn't matter if it's really a currency, a stock, a commodity. No, it really doesn't matter. Whatever you're trading on your chart, right, a lower time frame, right, is gonna show you a bunch of noise, right? It's really gonna show you a bunch of noise. What do I mean by noise? What do I mean by you can't grasp the reality of a market by trading? Okay, so if you want to take a look over here, right, let's say we do a little bit of plotting, right? Let's do that together, right? Okay, so we take our horizontal line, right? Let's plot our bottom, right? Everybody can agree that this is a support level over here. Why? It cuts through multiple points, right? It's at this level over here. Maybe this one is more appropriate. Let's use this one instead, right? We take another one, right? We put another line instead, right? We drop it right here, right? Why? Because if you take a look over here, right, it cut through multiple levels over here as well, right? So you can say that by looking at this 1 minute chart, it's pretty sideways, right? It's pretty sideways, okay, right? Totally fine. And then you think like, oh, maybe I can do one level better. I'll take a trend line. No, I'll plot it out real quick. Yeah. So I'll plot it through here, right? Multiple swing highs and swing lows. I'll plot it again through multiple swing highs and swing lows, right? Let's do that. Ooh, nice, very clear plotting of the chart, right? You can see that it's clearly coming up. Okay, it's a ranging market, so that means it's going to come up afterwards. So let's do a quick analysis over here. Let's just bada bing, bada boom, right? Right, look at it like that. Right, speed run. Like we're gonna speed run the heck out of this, right? Let's go back. Let's go back. All right. So we speed run the hell out of this. Let's go. Right, taking a look at the chart. Right, okay. This is a ranging market, right? Okay, so ranging market, right? It's coming downwards, right? That means it's a downtrend within the ranging market, and it actually bounced off a key level over here, right? It's looking to test this high, right? If it breaks out from here, it's gonna go up, right? But it's kind of risky if it comes out from here, right? So I think it's going to continue its trend downwards, right? Because it's going to bounce off from here and come down here, right? So I'm going to take a sell, right? For example, right? I look over here, I see the trend, it's a sell, right? Okay, so that is what I would do on a lower time frame, right? Why am I rushing? Why? Because it's within the minute, right? If I don't trade within that minute itself, right, the market is going to move. It's going to move on without me. I'm going to be lost. I'm going to be stuck. And then when you take a step back and you go to a 4-hour time frame and then you take a look, just really take a look at what you just plotted, right? We are gonna zoom out, take a step back. What we really only ever just did, right? We put things back in perspective, put things back in scale, right? What we ever really plotted was this, right? This gap, and this gap, right? It's 6 point. So what is this? 0.674, 0.672, right? That's only a range of about 20 odd pips, right? So only a range of about 20 odd pips. And if you really like, take a quick, just honestly take a look, right? This was the support and resistance lines, the slanting ones that look incredibly massive, but then now they just look so small, right? They look ridiculously small, and I find it incredibly funny lah. if you really squeeze yourself down to this level and actually try to take a look at like I'm gonna take a trade here, I'm gonna take a sell trade here, I'm gonna take a buy trade there, you're putting yourself in a box and you're really tunnel visioning yourself. You are refusing to see the trend on the bigger picture. So if you look up, right, take your head out of the box, right, stop being an ostrich. When they get scared, they put their head in the sand. You're doing something similar lah, as a trader. If you're trading on a smaller time frame, why? You're looking at this kind of small little ranges, like these minute little movements in the market, and you're refusing to see the big picture, whereby actually you can see that there's a rising trend over here. Sure, they may have broken up from the pattern, but really this uptrend, right, of higher highs and higher lows, it hasn't really been broken. One could argue that if I replot my support and resistances, right, if I replot them, right, let me just do that real quick. Right, if I replot them, I could easily say that, okay, I can disregard this week, right? I plot through this point. I can easily disregard and say that, hey, this uptrend is actually continuing. And if you were to look and tunnel vision yourself, right, and you say that, oh, it's clearly going down, you're only looking at one H4 candle. Right, likewise, I could say the same for H4 as well. I could look at the daily time frame and see something else that's different. But major trend is king. Why? Because if you mess up, right, if you mess up on a major trend, right, and the market goes against you, right, you still know that the major trend is up and that a retracement, right, you can still write out the retracement. But if you're trading on a small time frame, right, and you make a mistake, something so key as to the change in the trend, you'll get lost out and cut out so quickly, right? If you look over here, and what are you really trading for, right? You have to look at these small time frames, enter into the trades quick, take your profits early, right? You really have to squeeze yourself into it. Look, and you plotted this support and resistance and it's coming down, and then suddenly it's cutting through the top part, and you're just like, what am I doing? Right? So if you look over here, right, you're actually putting yourself in a box, and that's why I don't like when traders do that. They put themselves in a box, they tunnel vision themselves, and then they think they are seeing things but that's not really there, and it's too fast paced for them to grasp. So if you make a mistake, you have to adjust accordingly, and if you enter into a trade, you have to get out quick, get in quick, get out quick. Like, this is the way you trade on smaller time frames. It's actually really mentally draining, and you really have to know what you're doing because you have to cut your losses quick. The market will not give you time to make mistakes, learn from them, analyze, and really take your trades as they come. No, the market won't give you that kind of opportunity. When you take the trade, you're either in or you're out, and you need to know where you're in and when you're out. Right? Sometimes you may even spot an opportunity on a 1 minute time frame. You may analyze it correctly or quickly enough, but by the time you actually enter the trade, the moment may have already passed. And if you trade on such small time frames, right, it really constricts you, and that's just something I don't understand, and I keep using these words over and over again. Constrict, tunnel vision, put yourself in a box. It's really cramping, it's really claustrophobic. Whereas if you trade on a bigger time frame, right, the style of trading that you actually partake in is something that's a lot more smooth, a lot more slow, a lot more relaxed. You're looking at the market, you're understanding, you're saying, okay, right, this is moving like this over a period of days, right? So it's something concrete. You know that the trend has been lasting over a period of time, right? Even though one candle is 4 hours, when you're looking at the chart, this could be a few months, right? It could easily be a few months if you look at like a really, really big picture. But realistically, will be over a couple of days, couple of weeks, right? And when you look at the chart, you roughly understand the trend. And when there's a change in major trend, it will be very easy for you to follow, right? If it's a bear market, you enter with the momentum and you be bearish as well. If it's a bullish market, you enter with the bulls and be bullish as well. So you don't have to risk yourself. You can follow the herd, right? But when you're trading on these smaller time frames and what we call scalping, right, no longer the form of intraday or swing trading, right, you're forcing yourself. You're really forcing yourself to keep up, right? A close friend of mine always likes to give this analogy. You may be able to kick a ball, right? You may be able to enter a trade, right? But you can kick a ball, Ronaldo can kick a ball. Why don't you get paid the same as Ronaldo? So same, you can enter a trade, a professional trader can enter the trade. Both of you can enter a trade on the on the M1 time frame, 1 minute time frame, right? Both of you can do that. But why are you not paid the same as a professional trader? Well, simple answer is because you're not him. And if you can kick a ball and Ronaldo can kick a ball, that doesn't make you Ronaldo. So if you really want to start trading, right, yes, you have to start from somewhere. Yes, you have to start analyzing. Yes, you can start on a demo account. But if you're going to start on a 1 minute time frame, you're wasting your time. Why? Even though it's a few minutes of your time, just a 1 minute, but you're really forcing yourself to keep up, right? You want to start running, right? You got to start slow, right? I don't expect you to ride a motorbike straight away. You got to start with a tricycle, right? You got to have training wheels. So if you fall back, if you have to fall, you can fall back on something. And that is really what trading on the larger time frame is like. You have training wheels, right? So you know that if you enter a trade somewhere into here, you enter a buy because you thought it was an uptrend. If you entered somewhere here and the market goes against you, you know that there's a potential time. There is time for you to analyze and say like, okay, this is really getting out of my way. Or you can reanalyze and say, okay, this is coming towards a slanting support level or a horizontal support level, and it might bounce back up. And then you can reassess from there as a trader. But if you do this on a 1 minute time frame, right, you really have to make a decision quick. You have to decide whether I'm in or out, whether I can still afford to stay, or I have to cut my losses. So this is what it's really like to trade as a beginner trader on smaller time frames. So that has been my rant or rant, I don't know, on smaller time frames. I really, really hate it, right? If you tell me you can trade on smaller time frames, you better know what you're doing. If you don't, right, don't even talk to me about trading on smaller time frames, because I will just give you this rant over and over and over again. So that has been it from me for today's video, right? If you really like this sort of videos where I really over explain the heck out of something, or if I actually go into a deep dive over small things like time frames and maybe even looking at trends, right? If you enjoy this kind of content, leave a like, and if you don't like this content, leave a dislike. And if you really want something to be covered, or if you want me to analyze something or go through something, well, comment and maybe I'll take a look and I'll review that in a future video. But that's it from me, right? I'll see you again, or maybe not, or maybe I will. Okay, never mind. Okay, yeah, bye. Right, that's all for today.